Welcome to the Driven to Succeed Real Estate Podcast. I'm your host, Brandon Olson, and I am welcoming back Clarissa and Razia Akhtar from Coldwell Banker.
And our C Real Estate Group. That's
Yeah.
our team name.
Yes.
Thank you so much for having us.
Yeah.
Really appreciate that.
Yeah, no problem.
Yeah.
Thank you, Brendan.
It was a last minute, so I'm glad that you guys could show up.
Yes,
We wanted to
yes.
shoot a couple today, so
So we're always ready, and we try to do our best and hit the road running. Sometimes our buyers and sellers are surprised. They'll call us and tell us, "Hey, can we meet up today or can we meet up tomorrow?" And we have all our analytics, everything ready to go. Like we definitely spend a lot of time in the back end to get ready, but we have a lot of our things which we kind of piloted,
Right.
working together ahead of time. So that's what we pass on to
Yeah.
our clients, and we're ready for the podcast today.
awesome. Well, you guys have always been so pleasant to work with, and even when times get challenging,
Mhm.
clients get challenging,
Yeah.
deals get challenging, being professional and working through all that is like amazing, right? And so
Thank
you
you.
guys have been, amazing.
Thank you very much.
You are too, of
Yeah.
course. We are a great team together.
Yeah, it
Yeah.
takes
It's
team.
all team.
Yes, yes,
Yeah.
it definitely.
Consistency and teamwork.
Yes.
Yeah, we always say we are each other's internal customers,
Yeah.
and it's so important. Like when we deal with our clients, we always say, it's an emotional transaction, especially we dealing sometimes with lots of different situations.
Mhm.
It's very emotional for the client, but we try to, tell them that we will manage the transactions, and try to manage them. And sometimes we are coaching a lot of people too. So
Right.
yeah.
Well, it's all about education, coaching,
Mhm.
Trust.
yeah,
Trust is very
It's important. Yeah,
and understanding their side. And
exactly.
I've seen some agents come into transactions and just be completely like not empathetic and not like
Yeah.
at all, right? And so love that your professionalism and how fast you guys can
Yes.
work through things. And and some cases, some people just don't understand how things work, and
Yeah.
and they get very emotional and they think it's this way or that way, or you didn't tell us this. And even if you do,
Yeah.
there's so much information coming at people, like
Hmm.
they you block things out, you can't remember
Yes.
this.
Yeah.
Anyway,
Yeah. It's
Well-
it's very important to, manage the expectations. So that's what we both try to do. Most of the time we're like, we will try to do our best, and we know a lot of it, but if we don't know something, we will find out and get back with you, and like we try to get
Right.
back with them.
Yeah.
So, and most of our business actually comes from like referrals and people who know us. So it's like,
Social
85% of our business is
Is-
referrals.
yeah,
Yeah.
no,
And that talks a lot about our business.
100%, because I mean, specifically in this environment right now,
Mhm.
you have to have that, because there's there's not as many transactions and
Right.
there's more sharks.
Absolutely.
There's
And together,
right?
we've been in the business for 26 years
Mhm.
together.
Yeah.
So that speaks.
Ton of knowledge,
Yeah.
tons, like the ever changing world of mortgage and real estate.
Mhm.
Yeah.
Things change all the
Yeah.
time.
Yes.
Cities can change things, and that
Yes.
that changes how you might have to sell or go through the
Right.
process of selling.
Yeah. Yeah.
Well, today we wanted to talk about with our potential clients out there and our past partners, and whoever watches this, right? So we
Mhm.
got plenty of, it's the real estate, right? So
Yes.
we got mortgage people that watch this, we got real estate people that watch this, and we got consumers, right? So all the consumers. So today we wanted to talk about first-time home buyers and potential people that are already homeowners that are thinking about, their family's growing, they want to expand it, but is this the right time, right?
Yes.
So I heard something the other day. It was like, when's the best time to buy a home? 5 years ago,
Mhm.
right? Always 5 years ago, right? Because it's cyclical, right?
Yeah.
And even when the crash happened and the values came way down in 2008, it was 5 years and the values were back up and beyond.
But we tell people that today is the best day because today is when you thought to buy your house. So,
Correct.
that's, yeah.
100%. That was my gist of what it is, right? You don't want to just sit and stay pat, like
Yes.
because we don't know what's going to happen in the future. We do
Right.
know what history shows, and over time your values go up. And
Yes.
we were talking earlier about, like, as a renter, You know,
Yes.
what is your net worth in
Mm-hmm.
5 years, 10 years, if you just simply rent versus you own?
Absolutely.
I have rent versus own calculators, and
Mhm.
your net worth can be easily be a couple $100,000 over 9 years
Yeah.
difference, right?
Yeah.
It's crazy, right?
Yeah.
So when you really look at, okay, you said it the other day, well, interest rates today say it's 7.5%, 7.75, or in some cases even 8%.
Mm-hmm.
But if you're renting, you're paying 100%.
Yeah, exactly. Like whenever Brandon, we talk about interest rates, and I'm like, I'm always telling people that build your net worth. When you buy a real estate, that's your net worth. You can say, okay, my net worth is like 500,000 or a million, because if somebody bought a house like 500,000 of a couple years ago, now it's almost close to worth a million. So your net worth is $1 million today because you bought the house at the right time. And if you're thinking you'll miss the bus, that's not the case, because you are in the present, right? The past is a past, the future is yet to see, the present is a present you give yourself.
So as a first-time home buyer, we have plenty of tools at our disposal to help, right?
Mhm.
So, one of the myths, you talked about 20% down. No,
Yes.
it's not. That's not the case, right?
Yeah.
Or I
But
have to have plus.
Sorry to cut you off a little bit.
Mhm.
Here's because, I have a couple of buyers that have been telling me that, no, you're wrong. You have to put 20% down. And I said, no, where did you find this information? The minimum down payment is either 3 or 3.5% down,
Mhm.
or sometimes just $1,000, like Clarissa mentioned. So talk about that.
Yeah, absolutely. So, let's say you got 3% down conventional financing.
Right.
This is, a newer loan product in the last dozen years. It's typically 5% down.
Right.
So you'd have to have mortgage insurance for a conventional Fannie Mae, Freddie Mac loan,
Yeah.
right? Well, they have programs for if you meet the income limits, so you don't exceed the income limits, and for most of the metro area, I think it's like 124,000. So now it's like 99,000. So if your income's below 99,000, you can do 3% down, get a lower interest rate and lower mortgage insurance costs. And the funny thing is, mortgage insurance has really come back from what it was years ago, right?
Mhm.
And part of that reason is that the mortgage insurance companies, after the crash had happened, they had to put so much cash
Mhm.
away. So if there was another instance like that, they can cover the lenders. So the lenders
Right.
won't go insolvent, right? So what then over the last, because the values are going up, so the costs have come down. I mean, I've seen, 3% down, on a 300,000 mortgage it's like $60 a month for
Yeah.
mortgage insurance.
Yes.
Yeah.
And like, holy cow. And I mean, there's lots of financial advisors say, hey, instead of putting 20% down, put 10
Yeah.
or 15,
Yeah.
put that the rest of your money in a money market
Mhm.
account. Let
Mhm.
that grow over the next 30 years,
Absolutely.
right? Because that's
That's correct.
going to be, great. But first time home buyers, 3%, 3.5% FHA,
Mhm.
right? And then there's down payment assistance
Yeah.
programs, and there's a lot of them out there,
Yeah.
right? And there's, where we primarily use Minnesota housing. Right?
Yes.
It's a big one.
Yes. And sometimes you can club it with whatever the city is offering. For example, right now, City of Eden Prairie is offering 15,000 down payment assistance. City of Richfield is offering 15,000 in a situation where there is, I think if the family of 4, then you can get up to 20,000. So, there are different programs, and MNCE, and Brandon is really great at closing those mortgages for us.
Mhm.
Those are second mortgages, but if we are getting that at no interest, might as well take advantage of that,
Yeah,
right?
and there are certain cases, there are grants.
Yes.
So NeighborWorks has programs in there where like Minneapolis, certain areas, St. Paul,
Mhm.
where $10,000 as a grant. So if you
Yes.
stay in the home like 5 years, that money is yours.
Absolutely.
So you don't have to pay it back. It
Absolutely.
starts off as a loan, and every
Yes.
year 20% comes off of it.
Yeah.
So then you only have to have that $1,000 down.
Yeah.
So you don't have to have this $20,000, $30,000 to get into a home,
Yeah.
and so forth. So
Yeah.
Yeah,
That's kind of a myth there. Yeah.
it definitely is. So
Mhm.
knowing how to navigate that. And that's where
Mhm.
like, I cut my teeth in this industry with first time home buyers and down payment assistance. And
Mhm.
did a lot of them because
You are so good with that.
Yeah.
Oh, thank you. It can be challenging. It can be super challenging.
Absolutely. I understand.
We've seen the highs and the lows, but as we said, we manage the emotions
Right.
and we try to get people into homes. And when they're into homes, they're like so happy and grateful. And also the same time, like with the interest rates going up, I've seen in the past buyers tell me maybe I should wait it out a little. And then they call me the next year and they're like, oh my gosh, last year this house was 300,000. Today it's 350. So home values are going up, even though the interest rates are high, because there's always been a crunch of inventory. We are kind of 6 million homes less in the US because you got to think people are living in homes longer. They're not moving out of homes, they're having in home care. So, what happens to the new people who are eligible for mortgages?
Right.
So they are renting right now and they need homes. And as to your point, 7.5 or 8% interest rates. But when you're, paying 2,500 in mortgage, in rent, that money is going to nothing. So, you might as well.
Yeah, it's where you do have to. I tell people all the time is like, don't get so fixated on the mortgage
Mhm.
rate right now
Yeah.
because 99.9% of mortgages do not go 30 years.
Yeah, I know.
You do sell it like the first time home buyers,
Right.
typical 9 years. Um,
Marry the house, date the rate.
right. In the fact that we're, as the industry and the trends and what's looking at like the forecast, it does look like what's going to happen in 24, 25, rates are going to come back down. We at NAF, we offer a 5-year rate protection. So what that means is when rates come down, we're not going to charge you the same fees as the first time around. So you're done like processing and underwriting and appraisal. It's like $2,000. So you can refinance. Because we do fully expect there's more buyers out there that are just sitting on the sideline waiting.
Mhm.
So when rates come down, what's going to happen? It's going to still push the market up because you're going to have more buyers for the homes that are there.
Right.
We're not going to go from 6,000 homes on the market right now to 30,000 homes on the market. It just isn't going to happen.
Yeah.
So understanding that and just don't get fixated on rate, is it a payment that I can afford, right? And is it a house I want in the area that I want to be in, right? And that's where we have to really, look at it because owning, versus renting is it from a financial standpoint, it's really, really great. So now let's talk about people that have an existing home, right?
Mhm.
And they're like, well, okay, we just had another baby, but the upgrade to the new home is going to be this. The rates are higher. We're struggling to understand if we should, can we find a home and sell ours and move into it at the same time, right? So one of what NAF does is, and you guys have joined the class.
Yeah.
We have NAF Cash.
Mhm.
Right? So NAF Cash, where NAF Cash LLC will actually go buy a home for somebody, right?
Yeah.
And this is really good for that situation I was just talking about, right?
Yeah.
So, if you can put together the earnest money for the down payment, right?
Mhm.
And you don't have to be contingent now on selling your house, and that's going to help you buy that house. Cash, what does cash do?
Yeah, cash is king. But the thing is, to your point, the ideal scenario for and Razia and I, we do a lot of clients where they buy and sell, like they either upgrading or downsizing. So we are actually trained and have a lot of experience to do the closings on the same day, which is very challenging for a lot of realtors.
Yeah.
And a lot of people have this doubt about how is it going to be like, how can I sell my house and buy my house? But we are the experts there. So I think that's a great advantage. Like an ideal scenario for most of the, home buyers who have already had their first time home. Now this is their next home is they want to find the right home, right? Because now they have certain expectations, because they've been a second time experienced home buyer. They don't want to just rush into something.
Right.
But, a couple of years ago, that was not the case because of multiple offers and the demand during COVID, where people were like, okay, I'm growing out of my space. I need a space. And then there was like multiple offers and you had to, put your house on the market first. That's what we used to tell people all the time. Put your house on the market, get an offer on your house, then we start looking at homes, right? So, and that's not ideal for most people. They want to find that dream home. So right now we are in a situation where we're like, okay, we can start looking at homes, and that's where Navcash comes in, where Brandon with that product is awesome,
Right.
where, they're able to put an offer on the home, close on their home, the new home, move all their stuff, and then have the existing house more ready for the market and sell it faster. That's the ideal situation.
Yeah.
So,
and again, cash is king. So a lot of times you can get a discount on the house that you're buying. You don't have to go to the max with a cash offer.
Yes.
Right. So it's a fantastic program. It's great. Even if you don't have a house to sell, right? And it's in the spring market and you're struggling. We've seen so many people struggle because they're financing, right? And they're getting beat out by other cash offers or whatever else. Cash offers, if you bring a cash offer to the table, 5 to 70% of the time, that's going to win, right? Closing fast and so forth. So, and then on the backside, as we're financing it, we can just, after they close on that, we just finance them into the house then. So it's a fantastic product. It's a great way to do things. The older people that are looking to downsize, such a great, because that's so stressful because you got to, number one, if they're downsizing, they got to also liquidate, right?
Yeah.
Get rid of.
And you have to remember they are competing with a first time home buyer as well, because they're looking at the similar homes, right? So you have somebody downsizing, somebody who's a first time home buyer. So, it's again, it's nice that they are able to find what they really want rather than having to, be compromise on a home. And like, okay, I need to put the offer, I need to go. And I had to offer like 30,000-40,000 above asking. So right now that's not the case. So that's an advantage for the second time home buyer, and also for the first time home buyer. The market is tight, but you're able to do some negotiations. And that's why you want the right realtor on your side, the right lender on your side, because we work as a team and we're a strong team. Because I see so many times on the listing, when I'm a listing agent, I see so many times that, the agent has not called me about the offer, or I'm not getting right communication from the agent. I'm not having any communication from the lender. But, it's so important. But when we are representing our buyers, we are on top of things, telling our, the other party what's going on. Brandon actually makes the call to the listing agent when we send an offer, when Razia and I send an offer, that this buyer is strong.
Yeah, that's, it's such a good practice to do because, we've won deals where we weren't the highest offer, right?
Yeah.
We won deals where we're FHA and the higher offers are conventional, but we're underwritten approved, or we're, like I can confirm, like I've done this a long time, like here's my reputation. And,
yes.
I'm not trying to say all this clout, but just like, let's have a conversation.
Yes.
And that goes way further. Than
Exactly.
anything else, right?
Yes.
Exactly.
We have, when we list any home and we receive an offer, we make the call to those lenders. They don't call us.
Yeah.
And I really appreciate, Brandon, that, you go ahead and call those agents and say, hey, what you need, they're fully approved, good buyers. It's just
I don't
amazing.
want a listing agent calling me to ask how a buyer is. Right?
We called them and they said, oh, okay.
Right. I want to be the one that lender. Number one, I want to potentially gain that realtor business, right? So
Absolutely.
My professionalism.
Yes.
So
yes. And we both, like you and us, we are like full time. Like we are full time realtors, and you're a full time lender, and we like focus on a lot of education wise, which we in turn are able to pass it on to our clients. There are so many realtors who are not trained. They have no clue about inspections. They have no clue what's going on. And, and then we have to sometimes tell them, and guide them in that whole process. But that's kind of our business, where we are, both full time and on top of things.
So yeah, I've had to do a lot of education sometimes in some cases as well. But
Mhm.
so strategies that we wanted to talk about today really is like why, like why now? I personally have seen the best deals. Okay, we're in October, right? This will probably be released in a couple weeks, maybe it's November, but this market right now is like one of the better, like before Christmas time, you find a house, you can make offers, you can get sellers to pay closing costs, you can get some, discounts.
Yeah.
You get a lot done. So this is one of
And you
my
can be in your house before the holidays.
and you're not writing, oh my gosh, we wrote 15 offers on this client, right? Something like it's, it's different. But let's talk about that, right? Seller paid closing costs, right? So let's say we are asking for a discount or just asking for them to pay closing costs, right?
Yes.
So I did a couple scenarios here on home prices with like a 3-2-1 buy down. This is great for FHA offer because FHA minimum, you can have up to 6% seller pay closing costs. Now, that's a challenge, right? Because number one, we can't exceed the actual closing costs. We can't get 6%. Be like, oh, we're giving you cash back. No, it doesn't work like that. It has to match the closing costs. But I get a 3-2-1. So a 3-2-1 is, let's say the interest rate is 7.5 today. That first year, the rate is reduced 3%. So it's 4.5% is what your payment is. So I'm going to talk principal and interest payments here.
Okay.
Not total taxes and everything, but principal and interest, right? So a $250,000 home. Let's just start there. With like 3.5% down, we have a payment of $1,203 at 4.5%. The rate at 7.5 that first year, if it's just straight 7.5, that payment $1,660. So it's $457 less every month for that first year. So total savings that first year is $54.80, right? And we do have my bulldog over here who's going to chirp a little bit, but year two, it's now a 2% discount, and that payment's $1,358 versus $1,660. So it's $3,700 in savings. Year three is 1% off, so it's $1,501 versus $1,660. So $160 less a month, approximately $1,900 in savings. So total savings is $11,000, right? Now, most models predict that we're going to have lower rates by 2025. So in that time, you could start off with much lower rates and have that lower cost to buy that home. So that's a strategy. That's a great strategy. It's not as common for 3-2-1 because the actual cost is like $11,000 that we have to ask for and exceeds 3% seller paid closing costs on conventional loans. FHA, we can work it out. But there is cases where you put 25% down or 30% down on a home. Let's say you are selling a home, you can get this from a seller. So for a conventional loan too.
Not bad.
No.
Yeah, it's really nice how you have creatively come with some savings for the buyers. And that's where you need the right lender. Yeah, and Brandon is local as well, so that's another advantage. He's there when a listing agent calls or when we call, he's always available.
Right.
Yeah.
Picking up the phone is a huge thing for us because not many lenders pick up their phone right away.
Yeah, and especially we are sometimes calling him like late evening, 7-8 p.m.
Right.
Also on weekends,
Even 10?
Yeah. And I remember you being a couple of times on vacation and be like, Clarissa, I'm actually on vacation, but you know what? Tell me what you want fast, so I will handle that for you. And you do handle it, which I really appreciate.
Thank you so much.
Yeah, because that's important. That's kind of how we work too. We don't say that, hey, don't call me after 6 in the evening. There are agents who do that. They'll be like, my working hours are going to be 8 to 6, and then if you leave me a message, I'll get back to you the next day. Right. But we don't do that, Time is of the essence.
Correct. I mean, and that's why you have 85% of your business.
Yes.
Is, communication. I'm very big at communication. I sometimes ramble. These guys laugh at me all the time. I can talk forever. So now going back to 3-2-1, I wrote a couple examples, but we're going to go fast, right? So $450,000 home, 3-2-1 buy down. The first year let's just say at 7.5%, same scenario, right? 5% down. Your principal and interest payment is $29.89 at 7.5. At 4.5, it's $21.66, $800 less.
That's a lot.
It's a lot. Almost 10,000 that first year.
Yeah.
Second year is 561 a month less. Third year is $287. 450. Right. So 550, 650. You can see how big of a difference it is. Like a 550, I think it's 600. It's like $1,100 less a month. So, obviously we want to, be able to take advantage. It might be harder in the spring market to do something like this, but here's more realistic is a 2-1 buy down. Even then, let's look at the 450, 452-1. So that first year interest rate's 5.5. That's 560 a month, right? That's a long ways. Right? So being creative, looking at these different programs that can be offered is, going back to when's the best time to ever buy is today. Or 5 years ago. Well, you can't back up five years.
You can't go into the past.
It's the right time.
Right. You just have to work with it. You have to work with professionals. I've talked on other podcasts, over the next year, over what's happened. There's been a lot of people that stepped away, a lot of people working part-time, in this, part-time jobs to stay in this industry. And some people like, I just can't do it anymore. Right. So
it's just like going back to 2004, 5, 6 year that, a lot of agents who were working, part-time at somewhere being an agent because not a lot of business, too many foreclosures.
Yeah. And now the name of the game is making sure that we capture that market share. Right. And, make sure that, we're educating our clients, and whether they're first time, whether, they haven't bought a home, the ones that they get me a lot too are like, last time I bought a home was 96.
Right.
Well, there's a lot that's changed since 96. Right. And, we got into, talking with a VA, a veteran, right. And they bought a home not too long ago with a different lender. Well, it was like 11 years ago, with a different lender, and the lender charged them no fees, right? Yeah, at all. Right? Wow. So they just built it into the rate, right?
Yeah.
So, which you can do with VA loan, right? So they were like, oh no, I didn't, zero down. I got, so why are you charging fees? And it's like, well, we can push some of that into the rate, but we can't cover it all anymore. In the rate, right? So things have changed, and they're just saying, well, no fees. And there are some places out there that do like no lender fees, but you still have the title, you still have everything else, but you're paying it at an interest rate. That's what you have to understand.
Yeah, and that's what I see sometimes, clients telling me, oh, this lender actually, sometimes I'll hear about some online lender or somebody whom I don't know, and they'll be like, oh, I'm getting actually a 5%. And I'm like, 7.5, you're getting 5. Have you seen what the closing costs are looking like? Because sometimes that's added in the closing cost. And suddenly, where 3%, it's gone to 4 or 5% closing cost. I'm like, why are you paying that much more? I mean, obviously, sometimes I don't get into the finances that much because I work with a lot of friends, and I'm like, I don't need to know anybody's finances. I think I must have told you that too. Like in the beginning, I'm like, I work with a lot of friends. I don't need to know anybody's finances. But if they need my opinion about something, I'm not the expert, but I know, some stuff about lending. And sometimes I always, yes, but then I always tell them, I always tell people when they're meeting me for the first time, I say, look at, number one, how is the communication from that lender? Number two, what interest rate are they giving you? Number three, look at what the closing costs are. Somebody could give you a low interest rate, but then bumping up the closing costs by 2% is not making sense because they're trying to buy points to give you that interest rate.
And that's where, being on this side of it and looking at some loan estimates and worksheets that I've seen over the last year has been crazy. And like, I have one right now. It's a Wisconsin file that I got from our NAF has this online lead generation program. So they came through it, whether it was Lending Tree or whatever, however they got to me, and they're working with another lender. They've been under contract for 6 weeks. And Monday was the first day they got put into underwriting. And I had talked to them last week, and they said that the communication was terrible. They were about a quarter of a point less than what I was at. And so that's why they're reaching out like, we can't get it. So I said, well, complete an application, give me all your docs. So I looked at everything and I'm like, well, they're not even set up for success on this. Like we have variable income on a new job. We have income limits for the program we're trying to use on a multifamily. There's like, I saw 5 like down. I'm like, well, there's a reason why they haven't got to underwriting. And there's a reason why this loan officer's not communicating very well. And they have great credit, they have the cash, but we have to figure out like how to use the program to buy this house, right? So got a little creative about it, and I talked to them, and then they're like, oh no, they got back to us, and they're, with the appraisals order and everything's good. I'm like, okay, well, I've already kind of outlined some things you have to be concerned about and what they're telling you and so forth. This was a week ago. So on Sunday, I'm at my family birthday party, and I'm getting texts like, hey, they're, not getting back to us. They canceled the appraisal, blah, 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 like all this stuff. And I said, okay, well, let's have them send you a loan estimate.
Yeah.
The lender wouldn't even send a loan estimate.
Wow.
And so then I talked to them on Monday, and they've, they're like, okay, we're going to go with you now. I was like, okay, fantastic. I need this, this, and this, right? So we get going. Well, then that afternoon, oh, they did this, and it's an underwriting, we're underwriting approved, and they sent me the letter. It says, no, it was submitted to underwriting. So this is 6 weeks in, and they finally got to underwriting and whatnot. So I said, well, did they ever send you a loan estimate? No, they won't. And I said, well, why are you, we talked, and finally they got one Tuesday morning. She says, okay, they sent it to us, and it's not at all what they said it was, right? Discount points. It's charging 3 points, and the rate was 3/4 of a point higher, which rates were climbing anyway. The last, it's just
last month has been crazy.
It just keeps climbing and climbing. You just have to lock immediately. So long story short, now they're upset and they're going to cancel, and so I get it going, and to save it and so forth. I'm talking to lender to the agents now and so forth, but that's the kind of things that are happening out there, and the mortgage companies that are out there, that these national lenders, and New American Funding is a national lender, but they use local people like me that actually do the loans, right? Or they have a complete support center. We are one of the nation's best servicers. And JD Power gave us 2022, right? So we can't advertise that anymore per JD Power rules, but
really? Wow. But JD Power is a quality expert.
After July 1st or whatever, you can do it for a whole year, and then after July 1st they have new regulations on their things, blah blah blah.
And that's all right.
But it is what it is. We just had it again in 2023. So
but we work in a people's business, and when you do a good job, we always refer, and we've been working, Brandon and I have been working since 2016, I think.
Yeah.
Right? It's been almost 8 years. Right. And even Razia, right? You've done so many, and new construction deals where actually new construction,
construction buyer.
Yeah. Where, the builders say we're going to give you this much in closing costs, but when we actually compare it apples to apples, remember we did a couple other new construction too. We actually see that when the buyer shops a little bit with Brandon, they actually save money and get really good customer service at the end of the day.
Again, some people, it comes down to, I don't care. It's a 1/4 of a point. I don't care what it is. And you can't. So you just sometimes can't get over that objection, right? But many people, and I've had numerous times where I get a call a week before closing, and like, we're not closing anymore. And, like, well, I got nothing to do with it. And that's an agent call. Like, hey, what's going on with this? Did they not tell you they went to a new lender?
Yeah. So didn't you have that one buyer who said the builder was trying to give him, I think, $500 lesser than what Brandon was giving, and he said, no, I'm not. I am going to go with Brandon.
Right.
It
was actually, I think it was like three or four.
Yes.
Because
oh, really? Okay.
It's been 3 years.
Yeah.
2 years or 3 years.
Yeah.
So
and those buyers are coming back to you.
Right. Yeah. Absolutely.
Because you did such a great service. They're so happy. So happy.
I love hearing that, because that's, we put, this is a job I absolutely love, and taking it beyond, building a mortgage technology company, podcast, and doing everything else. Like,
Yeah.
and I left the car industry.
Yeah.
And
Yeah.
No, but you're doing awesome. You're doing awesome. Like, remember this one buyer of mine, they were friends. They had not even, they told me, Clarissa, go buy. We want this in our house. And, they didn't see the house till the day of closing. And they were moving from out of state. And then you helped them on the loan side and I helped them. And they only saw the house on the day of closing. That's trust,
right.
And,
but going back to not, it's a team, and you guys
Mhm.
have always been so like very calm with your clients and very good with them. And, I've had some agents that just go crazy, and it's like, hold on, time out. If you go crazy, your client's going to go crazy. I don't,
yeah.
and that stuff that, there's unforeseen things that happen.
Yes.
Yeah.
Right?
You can show those
Inspections.
emotions to your client.
Yeah.
You're right. Right.
And if you put your client's interest before yours, you cannot go wrong. And that's what we both do. We put our clients first. We
do.
try to, help them in their transaction. I think Zig Ziglar said that too, put your clients before you and you will see success. And that's totally what we believe, giving best quality service, and just make it happen.
Awesome. Well, I want to thank you guys. Please like and subscribe, people.
Yes.
We'll have Clarissa and Razia's contact information below. Reach out to them with any of your needs at all. And I look forward to
Yes,
seeing
please
you
do.
guys. And
Thank you for having us.
Thank you so much, Brandon. Really appreciate it. Good to see you again. And let's do it again sometime.
Absolutely.
In the winter, maybe.
Yes. All right. Well, thank you.
Thank you.